It is 8:40 a.m. Pacific Daylight Time. It is the 27th day of March, 2025. This is episode 1063 of Bitcoin, and we're going to start with something fun. Maybe you guys noticed something strange going on the interwebs yesterday. Lots of anime-looking stuff going on. Well, it turns out we actually understand what happened. So this is from Shara Malwa, Coindesk.com. Studio Ghibli craze inspires meme coins on a whole bunch of shit chains. I'm not even going to say the names, but if you were wondering why you saw some stuff going on with like Studio Ghibli type anime, this is what happened. OpenAI released a new 4.0 model. Apparently that's what all this was about. So in a bizarre twist of AI tech and nostalgia is seeing meme coin enthusiasts issue pump and dump, clearly, tokens themed after Studio Ghibli movies as a new AI art trend that went viral in the past 24 hours. Just think about that sentence for a second. We were almost seeing the death of meme coins. Almost all activity with ordinals and inscriptions on the Bitcoin blockchain just stopped. I mean, we went from like having 98 blocks, full mempools all over the place down to today I think we're at like 20, 22 or something like that. It's been that way for weeks. Inscriptions screeched to a halt. Bored Ape Monkeys. I gave you a couple of stories the other day. Bored Ape or Bored Yacht Ape Club or Bored Ape Yacht Club. Just a standstill. And then all of a sudden, it's something completely unrelated. ChatGPT or OpenAI or whatever released this new 4.0 model. And all it did, honestly, was just allow you to make pictures inside of the 4.0 model instead of having to go somewhere else. You go to a different model. And what did we do? We pump and dump meme coins. Do not think this crap is over. The poor will always be with you, as Jesus said. This is coming after OpenAI's newly released 4.0 model. Its most powerful image generation tool that spits out artwork based on specific user instructions and style guidelines, mimicking the characteristic vibe and style of artists and animators. Thursday's internet craze is specific to AI-generated images styled after the whimsical, hand-drawn charm of Studio Ghibli films, with fans flooding the web with selfies and landscapes with an eerie precision of the studio's My Neighbor Totoro and Spirited Away films. Pausing just to say that Spirited Away is one of my favorite films of all time. I'm just going to put that out there. The hashtag Ghibli AI has since racked up millions of hits on X and Instagram, and crypto traders are now turning the trend into digital gold. No, it's not digital gold. It's garbage. Stay away from it. A flurry of Ghibli-themed cryptocurrencies are doing the rounds on Ethereum and Solana blockchains, with Ghibli-fication, or Ghibli, G-H-I-B-L-I, emerging as the biggest one yet, with a $21 million market cap as of Asian morning hours. Inspired meme coins often go viral and tend to rack up bets because they tap into internet culture's love for humor, absurdity, and community. Their low entry cost and wild price swings draw speculators chasing quick gains, amplifying buzz. It has now racked up nearly $70 million in trading volumes in just 24 hours of going live from a little over 250,000 individual trades. The token's liquidity pool has just over $333,000 worth of Solana's SOL, meaning the max a Ghibli holder can exchange their holdings for, minus price declines. Smaller tokens such as Ghibli Doge and Studio Ghibli inspired Doge, or a Studio Ghibli inspired Doge, and popular movie character No Face and Utaro have inspired their own tokens. However, these have not gained as much traction. I don't even know what to say about this. Because yesterday everybody was like going, what the hell's going on with all this Ghibli stuff? Hell, even I was asking that question until I finally figured it out. And I'm like, oh, let's go over to Chat GPT. I'll pick the 4.0 model. And I did a Ghibli character of my own, which was inspired by one of the people on Nostr, basically saying, we need to Ghibli-fy this. And he gave me the image of that dude from The Office going, no. So I Ghibli-fied it, and it worked. It worked pretty damn well. But the fact that we took it from going viral into an immediate market cycle of meme coins is disturbing. It's disturbing. I mean, you got people that are, like financing burritos on 4 payments from DoorDash. And now you've got a situation where every internet meme has come closer and closer to the immediate manufacture of meme coins that just blow everybody out. It's sad, and I really wish it would stop. And speaking of stop, let's go back to Gamestop. They've got even more news going on after their announcement yesterday. This is Nick Ward from Bitcoin Magazine. GameStop's Bitcoin move looks bold, but it might be brilliant. This week, GameStop quietly updated its investment policy to include Bitcoin as a Treasury reserve asset with approximately $4.78 billion in cash, and that's nearly 37% of its $12.9 billion market cap. This move marks more than just a diversification of reserves. All right, I need to pause. People have been giving GameStop shit, and I talked about this a little bit yesterday. I just want to talk about it a little bit more, given that little piece of information. 37% of its almost $13 billion market cap is in cash or cash equivalents. Those things that are easily liquefiable into cash. That's huge. That is a lot of your market capitalization in cold, hard cash. And I'm kind of really starting to become interested in which way GameStop decides to go, because they have all the ammunition they need to do whatever the hell they want to do, and people are still just giving them shit. We'll watch. I will definitely be watching. Anyway, it's a signal that corporate treasury strategies are evolving. That excess cash on the balance sheet can and perhaps should be more than idle. And that new asset classes are gaining legitimacy in the boardroom and not just on message boards. GameStop's move may not be typical, but it is highly strategic and increasingly relevant for chief financial officers evaluating how to preserve capital and unlock value in a shifting macro landscape. For companies with material cash holdings, the erosion of purchasing power is no longer theoretical, it's measurable. Over the past decade, the United States dollar has declined in real terms by more than 25%, driven by inflation, expansionary monetary policy, and global fiscal uncertainties. Bitcoin presents a compelling counterweight to that degradation, particularly for balance sheets with the flexibility to tolerate mark-to-market volatility in pursuit of long-term strategic payoffs. Consider Bitcoin's defining characteristics: the fixed supply, global liquidity, resilience to monetary interventions, and long-term outperformance. With a 6-year compound annual growth rate, or a CAGR, of 72.7%, Bitcoin has dramatically outpaced equities, bonds, and real estate over the exact same period. It should have mentioned most commodities like gold. It definitely has outpaced gold. For CFOs thinking in 3 to 5 or 10-year increments, the case for allocating even a small portion of excess cash to Bitcoin is no longer fringe, it's prudent exploration. Until recently, many finance teams ruled out Bitcoin simply due to unfavorable accounting treatment. Under legacy GAAP standards, Bitcoin had to be impaired when its price dropped, but could not be revalued when it recovered, an asymmetric model that distorted true economic value and discouraged adoption. But in late 2024, that barrier was removed. The Financial Accounting Standards Board, the FASB, approved new rules that now allow companies to measure Bitcoin at fair market value. And beginning in 2025, companies can reflect both unrealized gains and losses in their earnings. They can report Bitcoin more transparently in their financial statements, and they can align accounting treatment with actual asset performance. This change addresses one of the most common objections from CFOs and audit committees alike. It brings Bitcoin into compliance with modern reporting standards, making it viable not just for speculation, but for responsible treasury management. So why is GameStop a natural fit? Every company has a unique capital structure, investment base, and operational profile. GameStop's decision to allocate to Bitcoin wasn't just bold, it was structurally appropriate. High liquidity. It has $4.78 billion in cash and cash equivalents. That means GameStop's balance sheet provides room for allocation without compromising near-term operations. It has a resilient investor base. GameStop shareholders have already demonstrated long-term conviction and a willingness to support unorthodox but calculated strategies. Cultural alignment. As a company that challenged Wall Street norms in 2021, GameStop's embrace of a decentralized digital reserve asset aligns with its identity as a financial outlier. This doesn't mean Bitcoin is a fit for every public company, but for those with excess reserves and a forward-looking treasury mindset, it does deserve serious consideration. GameStop's move is part of a broader rethinking of the traditional treasury reserve model. For decades, companies stored value in cash, short-term bonds, and dollar-denominated equivalents, but in today's environment, those instruments may preserve nominal value while degrading purchasing power. Bitcoin introduces an alternative, and the macro backdrop is increasingly supportive. There's ongoing inflation. Despite cooling from its peak, inflation remains persistently above central bank targets, which is 2%, steadily eroding the real value of corporate cash holdings. We have elevated debt levels. Sovereign debt across developed nations continues to climb, increasing the likelihood of future currency devaluation and suppression of real yields. We have ETF, or exchange-traded fund-driven validations. The approval of spot Bitcoin ETFs introduced new channels for institutional participation. There's a shift in investor expectations. As digital native generations begin to shape capital markets, shareholder interest in Bitcoin and hard assets is rising, especially among retail and growth-oriented investors. These tailwinds create space for chief financial officers to begin allocating conservatively without needing to commit to a radical overhaul of reserve strategy. GameStop's move didn't come with a flashy press conference or social media fanfare. It came through a formal policy update, exactly how strategic treasury decisions are typically made. The signal it sends is simple but important. Quote, "We believe excess capital should be protected and positioned for asymmetric upside," end quote. Bitcoin is not a cure-all, but it is now, for the first time, auditable, liquid, and institutionally viable. And for CFOs with flexibility and foresight, exploring Bitcoin is no longer about being first, it's about preparing for what's next. All right, so continuing on with this theme of GameStop, they have made an announcement. And it wasn't just that they're allowing Bitcoin to be put on their balance sheet. They have taken a page directly from, with almost no alteration whatsoever, and honestly, I don't think there's any alteration whatsoever, right out of Michael Saylor's playbook. They're going to do the exact same thing because Nick from Bitcoin Magazine says GameStop announces a $1.3 billion fundraising plan to purchase Bitcoin. What do you want to bet those are securities? Let's find out. GameStop announced today that it intends to raise $1.3 billion through a private offering of, convertible senior notes, and will use the proceeds from this offering for general corporate purposes, including the acquisition of Bitcoin. The move comes one day after the company revealed an update to its investment policy, allowing Bitcoin to be used as a treasury reserve asset. The offering consists of $1.3 billion of aggregate principal amount of 0.00% convertible senior notes due in 2030. So no yield, no coupon attached to this. Additionally, the company plans to grant initial purchasers an option to buy up to $200 million more in notes with a 13-day period from the first issuance date. The notes will be generally unsecured obligations and will not bear regular interest nor accrete in value. They will mature on April the 1st, 2030, unless converted, redeemed, or repurchased earlier. Upon conversion, GameStop will have the option to settle in cash or shares of its Class A common stock or a combination of both. The initial conversion rate and other terms will be determined at the time of pricing. The company stated that it expects to use the U.S. composite volume-weighted average price of its stock from 1 p.m. to 4 p.m. Eastern Daylight Time on the pricing date as the reference for the initial conversion price. GameStop emphasized that neither the notes nor the shares of common stock issuable upon conversion have been or will be registered under the Securities Act of 1933 or any state securities laws, and as a result, they may not be offered nor sold in the United States without registration or an applicable exemption. The company also states that there are no assurances that the offering will be completed as described or at all. This is almost like a freaking Justin Sun announcement of an announcement. This is a little ridiculous, but this marks a significant financial decision by GameStop as it pivots toward integrating Bitcoin into its corporate strategy. Of course, the strategy was pioneered by Strategy's Michael Saylor, who met with GameStop CEO Ryan Cohen in person last month and has definitely appeared to have had an influence on the GameStop's decision to embrace BTC as a reserve asset. Yeah, well, clearly, but that language the company also stated that there are no assurances that the offering will be completed as described or at all. Okay, so this could be a thing. It's at this point it's not definitely not a thing. It's also definitely not a thing. I don't know what this is. At this point I have no idea what the hell GameStop's doing. I can only assume that is a supreme cover your ass statement. But honestly, man, either shit or get off the pot. If you're going to release a statement that you're going to, generate $1.3 billion of senior notes at 0% interest rate, and then you give all the conversion data and the conversion dates, and then you go on to say, well, we may or we may not do it. That's a little shady, man. That's just a little shady. But you know who's not shady? Maple Trade. Maple Syrup and his sister Sarah Soaps on the Circle P. Circle P is open for business. It is where I bring plebs like you with goods and services for sale to plebs like you. If you're not selling in a Bitcoin, you're not in the Circle P. His maple syrup is fantastic. He sent me some, and it's glory in a bottle, right? So a quart for $27. You can get two of them for $47. 1/2 gallon is $45. A full gallon is $80. But they'll come in 2 half-gallon things, right? It won't ship you just like a whole gallon. It'll have to be 2 1/2 gallon jugs, but it's $80. Or you can get 6 pints for $75. And like I said, this maple syrup, I've tried it myself. I know what I'm talking about. It's the best maple syrup that I've ever had, and that's saying a lot because I like maple syrup. He hand makes this. This is artisanal, true artisanal, pleb-made maple syrup. He taps all of his own trees. He trucks all of the sap over to the boilers. He boils all the water off. He checks the sugar content, and then he packages it by hand and mails it to you, and clearly takes Bitcoin as payment. Because if you're not taking Bitcoin as payment, you're not in the Circle P. If you order from Maple Trade, make certain that you tell him you heard about it here on the Circle P, and that way he can make a determination whether or not he thinks that the sale I made for him today is worth sending me Satoshis, which he always does. This is a value for value advertising model. He does not pay me up front for telling you about his stuff. In fact, he never even asked to be advertised for. I decided I liked his stuff so much that I wanted to tell other people about it. And if I make a sale, he gets to pay me what he thinks that sale is worth. That's value for value. That's the value for value advertising model. You will only find that here on the Bitcoin and podcast. All of his prices, plus his Nostr handle and his Twitter account, will be URLs in the show notes. So just click on it and say, I want to order your stuff. I want to order your stuff. I don't think he has a storefront. So you got to get a hold of him the old-fashioned way. So when you do, make absolutely certain you tell him that you heard about it here on the Circle P. Now over to France, where French blockchain groups' Bitcoin holdings have risen to $54 million US. This is Vismaya V writing for Decrypt.co. French-based tech firm The Blockchain Group has strengthened its position among global Bitcoin holders with the purchase of 580 BTC valued at $50.5 million. The acquisition brings the company's total Bitcoin holdings to 620 BTC, aligning with its long-term strategy of accumulating and perpetually holding Bitcoin as a reserve asset. Listed on Euronext Paris, the blockchain group has continued its Bitcoin accumulation strategy that began in November of 2024, acquiring Bitcoin to optimize its cash reserves. The latest purchase, made through its 100% subsidiary, the blockchain group Luxembourg SA, was financed using proceeds from, guess what? A convertible bond issuance announced back in early March. The company's accumulation strategy is driven by Bitcoin's unique attributes: unparalleled scarcity, security, and decentralization. At the time of the announcement, the Bitcoin price was $87,311, bringing the total value of the group's holdings to roughly $54 million. The company's initial buys coincided with pivotal events like the U.S. presidential election and Bitcoin's rise towards 100,000, giving the company a strong entry into the market. The blockchain group, trading under the ALTBG ticker, saw its stock rise from 16 pennies per share on November 5th to 51 cents on Wednesday, as per Google Finance data, marking a 220% increase since it began accumulating Bitcoin. To track the performance of its Bitcoin treasury strategy, the blockchain group has introduced key performance indicators including BTC yield, BTC gain, and BTC euro gain. Such metrics measure the percentage change in the ratio of total Bitcoin holdings to shares outstanding, offering the transparency into the growth of the company's Bitcoin assets. And as of the latest report, the company has achieved a BTC yield of 709.8% year to date, pointing to the success of its Bitcoin acquisition strategy. The French firm's latest acquisition places it among the top 30 corporate Bitcoin holders globally, a list dominated, of course, by Michael Saylor's strategy. The blockchain group's action is in step with a broader trend of companies embracing BTC as part of their financial strategies. And of course, they're going to talk about Gamestop. Recently announced plans to raise $1.3 billion to purchase BTC, blah, blah, blah. We already just went through all that. And then, of course, they talk about Japanese investment firm Metaplanet also being in that group. So there you go. Let's run the numbers. Futures and commodities trending now on CNBC.com. Bill Gates says that within 10 years, artificial intelligence will replace many doctors and teachers, and humans won't be needed for most things. Unless you need to be taught something or you get sick and need a doctor. I see, when Bill Gates opens his mouth and says shit like that, I honestly should just stop listening. I mean, I just saw it. I couldn't just not bring it to you. But I will be bringing you what we should be bringing you, and that is the price of West Texas Intermediate oil, which is down just a hair, 0.7%. 0.07%, $69.59, essentially where it was yesterday, as is Brent North Sea, which is down almost a fifth of a point to $73.66. Natural gas, however, is down a full half point, and gasoline is down a fifth of a point to $2.22 a gallon. Most of the shiny metal rocks are doing well today. We've got another all-time high for gold after a 1.33 percentage point increase, $3,064. Silver is up 2.65%. Platinum is up 1.7%, and palladium is up 1. Copper is the only thing in the red, down over 2 points. Most of ag is in the red today. It looks like the biggest winner is going to be soybeans, up 1.4%. And the biggest loser is coffee, 3 and change to the downside. Live cattle is up 0.14%. Lean hogs down 1.17%. And feeder cattle down just under a half. $87,140 is what it'll cost you to get your one Bitcoin. That is a $1.73 trillion market cap. And after you get that one Bitcoin, you can spend it on 28.5 ounces of shiny metal rocks. There are 19,842,572.81 Bitcoin in the supply, and fees are low again today. They reduced from yesterday at 0.04 BTC is what it stands at now. There are, it looks like about 24 blocks carrying 10,000 unconfirmed transactions waiting to clear at high priority rates of 4 Satoshis per VByte. Low priority is going to get you in at 3. And hash rate is still high, 846.4 exahashes per second. Still not seeing any kind of minor capitulation at this time. From yesterday's episode of Bitcoin and named Gamestop, I've got Anonymous with 5,000 sats says, love this episode. You know, I'm far from the U.S., never even been there. Still, important message. Politics resonates. I listen daily. My morning is not the same time, but good morning. Love ya. XPL BZX. Yeah, love you too, brother. Thank you for the Satoshis. And with another 1,500, somebody, and I don't know who, says boost. Psyduck with 571 says Psyduck. Yodel, 444 says, hello, fellow listeners. Permanent Nerd with 333 says, like Shishi21M, Comfrey is a... Well, I blew it. Like Shishi21M, Comfrey is to a tree guild. This podcast is a nutrient accumulator for your brain. Dude, thank you. I love Permanent Nerd. Pies with 100. Thank you, sir. No, thank you. That's the weather report. Welcome to part 2 of the news you can use. Tornado Cash. In the news from Lola Leitz, she's writing on her rag named The Rage, therage.co. That is therage.co. Treasury attempts to block sanctions judgment. This is getting really confusing. So I'm not sure what Treasury is doing at this point. Let's see if Lola Leitz can take us through the confusion that the Treasury Department is sowing in the markets. Last week, the Treasury Department removed Tornado Cash from the OFAC Specially Designated Nationals and Blocked Persons list, reversing U.S. sanctions on that software. Now the Treasury Department is attempting to stop the courts from granting a so-called motion for partial summary judgment, which would ensure that the Treasury cannot relist Tornado Cash or any software like Tornado Cash on OFAC's SDN list. That's that Specially Designated Nationals list. So Tornado Cash's removal from the SDN list came after the Fifth Circuit classified a Texas District Court's decision to designate the Ethereum software as a sanctioned entity as unlawful last November, clarifying that the software, like Tornado Cash, is not covered under the current design of the International Emergency Economic Powers Act, or the IEEPA. As the Fifth Circuit found, quote, The foremost task of legal interpretation is divining what the law is, not what the judge-interpreter wishes it to be. IEEPA grants the president broad powers to regulate a variety of economic transactions, but its language is not limitless, end quote. Effectively, the Fifth Circuit declined to interpret IEEPA to include software like Tornado Cash, which, as the court notes, was established in 1977, quote, years before the modern internet was even invented, end quote. If Congress deemed it fit to amend IEEPA to include software like Tornado Cash under its authority, it may choose to do so, the court effectively argued, and Treasury overstepped its authority by listing Tornado Cash on OFAC's SDN list. In conclusion, the Fifth Circuit directed the Texas District Court, in which a group of people originally sued against Treasury's sanctions on Tornado Cash, to grant a previously filed motion for partial summary judgment, a request for pretrial ruling warranted when, quote, there is no genuine dispute as to any material fact, end quote, in which the plaintiffs clearly laid out that software like Tornado Cash falls out of scope of IEEPA. The Texas District Court, which has not yet acted on the Fifth Circuit's ruling, may now choose to do one of two things. It may find that sanctions on Tornado Cash do not apply to the plaintiffs, which wouldn't make much sense, as anyone wanting to use Tornado Cash would then have to sue independently, or grant so-called national vacatur, or reversing the sanctions entirely. After Treasury reversed the sanctions on Tornado Cash, the agency on Friday filed a notice with the Texas District Court declaring that it is not necessary anymore for the Texas court to grant plaintiffs' motion for partial summary judgment because it had removed Tornado Cash from OFAC's sanction list. But unless the Texas District Court issues a ruling, no binding court order exists that would stop the Treasury from sanctioning other software like Tornado Cash or from relisting Tornado Cash on OFAC's SDN list at a later point in time, thereby reversing their reversal, is what's being written here. It is the ability of the Treasury, it is this ability the Treasury appears to be attempting to retain with its Friday motion, trying to stop the issuance of a binding court order. It makes clear the Treasury wants to, and likely will, continue to go after privacy services like Tornado Cash. The plaintiffs described Treasury's response to the Fifth Circuit's order as a study in chaos. First, the department set a deadline for February the 17th to respond to the Fifth Circuit's decision. Then it requested a 2-month extension. Then it asked the court to grant remedy merely to the plaintiffs without vacatur, only to 3 days later remove Tornado Cash from the SDN list entirely. Quote, enough is enough, the plaintiffs argue. Quote, it is time for this court to do what the Fifth Circuit ordered months ago. Plaintiffs' motion for partial summary judgment on count 1 must be granted, and defendant's designation must be held unlawful and set aside, end quote. Treasury overstepped its authority and, quote, the losing party obviously cannot escape that judgment by suspending its challenged conduct before judgment is entered, end quote. If that were the case, the plaintiffs argue no case would ever be litigated through judgment, calling the Treasury's actions absurd. Paired with the agency's stark warning for users of software like Tornado Cash last week, and its reiteration that fighting illicit actors in the cryptocurrency space is a top priority, the Treasury's war on privacy seems to be far from over. All right, now, for any of you guys that kind of like were blinking all the way through that, I've made some notes as to what all this kind of means. So, 1, the Treasury overstepped the International Emergency Economic Powers Act by sanctioning Tornado Cash in the first place. The law doesn't explicitly target things like Tornado Cash, right? So the IEEPA that they're barking about doesn't even affect Tornado Cash the way it's written. Second, Treasury resists the court order to finalize the ruling, avoiding precedent-blocking future software sanctions, which means that what they want to do is they're saying, oh, Tornado Cash is good for now, but it's not without prejudice, right? If it was with prejudice, they would never be able to sanction Tornado Cash again. They don't want that. They want to be able to sanction Tornado Cash in the future and hold their ability to do so with other things, right? So them taking Tornado Cash off that SDN list, that's what they're talking about when they're saying they're sowing chaos. Because they're like, oh, it's fine for now. Nobody wants to have to deal with ambiguity. And this is what this is. The Treasury Department has just become this ambiguous, nebulous thing that is a cloud hanging over everybody's future. And we thought we were going to get some clarity on this, but as far as this shit looks, there is no clarity on Treasury at all. There's no binding order to leave room for Treasury to re-sanction Tornado Cash or similar tools. Like I said, they can just re-sanction it. Treasury's erratic actions suggest the evasion of accountability. Like they somehow or another that they're going to be fined or something like that because they went outside the law of the IEEPA and sanctioned Tornado Cash, even though that law has absolutely nothing to do with things like Tornado Cash. No wonder all these people are pissed, especially the guys the lawyers for Tornado Cash. They're not happy. And I'm not happy because this is happening in Texas. This is happening in the Fifth Circuit Court of Appeals. These guys need to go free. They need to go free now. And Treasury needs to be told, you have to we're going to quash your request for all this shit outside the IEEPA with prejudice. Sorry for you. You're never going to be able to do this shit again. So the court is stressing that only Congress can expand the IEEPA to cover software. And Treasury is pushing for legislative changes, but they themselves cannot change it. And they've kind of done that. They've kind of interpreted it all on their own. So Treasury at this point is sort of like a rabid dog. Now, the plaintiffs have demanded nationwide vacatur to prevent piecemeal reimposition of sanctions, and Treasury's public warning on crypto privacy clash with the court's legal limits, and the plaintiffs are arguing that Treasury cannot bypass court judgment via unilateral delisting. Yeah, they somehow or another, Treasury seems to have delisted Tornado Cash as some kind of procedural maneuver to allow them to extend what it is that they're doing to these poor guys over at Tornado Cash. And it needs to stop. It just needs to stop right now. Moving on to JP Morgan. Oh, okay, hold on. I got to take a deep breath for this one because we're going to get into stablecoin. I told you I was right yesterday. I'm going to tell you that I'm even more right today. Check this shit out. Except this gets worse. Now we've got yield. Remember to always ask the question when you hear the word yield, where does it come from? JP Morgan sees yield-bearing stablecoins growing from 6% to 50% of market share. Yeah. Yield-bearing stablecoins, including tokenized treasuries, which offer interest returns similar to traditional financial products, could experience massive growth ahead, according to JP Morgan analysts. Yield-bearing stablecoins currently make up just 6% of the total stablecoin market cap, but could expand significantly, potentially capturing up to 50% of the market unless regulatory changes intervene. JP Morgan analysts, led by Managing Director Nikhilo, I cannot pronounce this name, not even going to try because it's Greek and I'm not good with Greek, wrote in a report released on Wednesday. So the top 5 yield-bearing stablecoins are Athena's USDE, Skydollar's USDS, BlackRock's Bildl, Usual Protocols USDO, and Ondo Finance's USDY. All have seen rapid growth since the United States election in November, rising from around $4 billion to over $13 billion in combined market capitalization. According to analysts, this growth is expected to continue. They added that the U.S. Securities and Exchange Commission's recent approval of Figure Market's application for a yield-bearing stablecoin, ticker of which is YLDS or yields, which is registered as a security, provides further momentum for this segment. Traditional stablecoins such as Tether's USDC and Circle's USDC or USDT and Circle's USDC do not share reserve yields with their users because doing so would classify these assets as securities according to the analysts. Such a classification would also impose additional compliance requirements, hindering their current seamless use as collateral within the crypto ecosystem, they said. The JP Morgan analyst identified several factors driving the rapid growth of yield-bearing stablecoins. First, the investors prefer these assets because they offer interest without requiring holders to engage in risky trading or lending activities or give up custody of their assets. Secondly, major crypto trading platforms such as Deribit and FalconX now accept tokenized treasuries as collateral, enabling traders to earn yield on the collateral that they're posting. It's amazing. It's like the eighth wonder of the world, isn't it? Additionally, crypto investors are increasingly turning to tokenized treasuries and decentralized finance to obtain higher yields, as typical DeFi yields have significantly decreased from their peak levels of 2022. Projects like Frax Finance are also adopting tokenized treasuries as underlying assets, further fueling this growth. Despite the positive outlook, the JP Morgan analyst noted barriers. Yield-bearing stablecoins are classified as securities, subjecting them to regulatory restrictions that limit their adoption, especially among plebs like you, also known as retail investors. Moreover, traditionally non-yield-bearing stablecoins continue to hold a notable liquidity advantage. With a combined market cap of around $220 billion across multiple blockchains and centralized exchanges, traditional stablecoins offer efficient, fast, and low-cost transactions, even at large volumes. In contrast, yield-bearing stablecoins are newer, smaller, and comparatively less liquid. However, this liquidity disadvantage could potentially be lessened over time as yield-bearing stablecoins gain further traction in the future in crypto derivative trading as a source of collateral in DAO or DAO, also known as Decentralized Autonomous Organization treasuries, liquidity pools, and idle cash with crypto venture funds. As a result, over time, yield-bearing stablecoins could attract much of the idle cash currently sitting in traditional stablecoins, the analyst said. While the exact amount of this idle cash is difficult to estimate, it is unlikely to represent the majority of the stablecoin market, according to the analysts. Houston, we have a problem. Specifically, USDT, or the guys over at Tether, have a problem. This is a new type of stablecoin, a yield-bearing stablecoin. And yeah, they've been around, but there's not a whole lot of traction for them. That's going to change because the market, now that and the market as represented by finance bros, you know, wearing ties and buying $7 coffees or $8 coffees at Starbucks, now that they're in the game, they're going to demand yield because they can, because the financial instrumentation exists. And they're going to choose yield-bearing stablecoins versus just regular old-fashioned vanilla stablecoin like Tether. I just don't see this as ending very well. But it's also not going to end poorly fast. It's going to be a long time. Remember what I've been saying about good old-fashioned vanilla-flavored stablecoin is that it's going to be used as a way to export an enormous amount of United States debt to the rest of the world. We're going to take our debt and we're going to we've already been doing it through the U.S., through the issuance of the U.S. dollar and treasury bonds, but now we've just got a different way to do it. And it's going to be more efficient. It's going to be more effective because it's all digital. I mean, it might as well be a CBDC for all that matters. Anyway, they're just going to print treasury bonds and bills. Tether's going to buy them however they get their cash. So, and all these other stablecoin manufacturers are going to buy the bills and the bonds. And the United States is going to take the money that they get on those auctions, and they're going to do whatever it is they do: bomb brown people. I don't know, make yell at white cisgendered men some more. Whatever it is that they think is so important. That's what they're going to do with that money. Meanwhile, those stablecoins are going to be rocketed across the globe, and they're going to cause widespread destruction because we're exporting our debt. We're just going to be cleaning everybody's clocks. But now, now we've got yield-bearing stablecoins that are coming onto the market. So here's my prediction. In the next few weeks, you will see USDC Circle, Jeremy Allaire's company, probably be first out of the gate to issue a yield-bearing stablecoin of their own. They will probably beat Tether because Tether has more of a Bitcoin ethic. And this may be the thing. These may be the suite of products that sucks the wind out of Tether's sails. What will that do, you're asking? I don't know. All I know is that I got a sneaky suspicion that when you print bonds to sell at auction and stablecoin companies buy them and issue yield-bearing stablecoins and export our debt across the globe at 6% interest, I still have to ask the question, where does the yield come from? I'm just saying, where does the yield come from? The United States is never going to be able to pay back its debt as it is, and we're just going to issue more. Where does the yield come from? And as if J.P. Morgan's report wasn't alone, we have the state of Wyoming. Yes, that's right. The very first state-issued stablecoin has been announced by Wyoming. This is Atlas21.com. According to Bloomberg, on March the 26th, Wyoming began testing its state-backed stablecoin, the Wyoming Stable Token. Ticker symbol is WYST. It's fully backed by cash and, you guessed it, U.S. Treasury bonds. WIST, YWST, represents the first attempt by a United States public entity to issue a state-backed stablecoin. The announcement was made during the D.C. Blockchain Summit, where Wyoming Governor Mark Gordon and Stable Token Commissioner Director Anthony Apollo discussed the project. And currently, the stablecoin is available on 7 blockchain testnets: Ethereum, Solana, Avalanche, Arbitrum, Optimism, Polygon, and Base, leveraging Layer Zero's interoperability infrastructure. WIST reserves will be held in public accounts of the state of Wyoming with a legal requirement to maintain at least 102% in backing. That sounds like Caitlin Long got in there with some of her language. The stablecoin is designed to generate new revenue for the state, with Wyoming planning to reinvest interest earned from revenues into education and infrastructure, particularly through the Wyoming School Foundation Fund. Governor Gordon stated, quote, "Our forward-thinking approach to blockchain and digital asset legislation has positioned Wyoming as a model for not only other states, but the federal government as well," end quote. To ensure cross-chain functionality, the state selected Layer Zero Labs as its technology partner. The stablecoin is built on the omni-chain fungible token standard, allowing for native cross-chain transfers. During initial tests, a transaction was successfully executed between Ethereum and Avalanche using something called Stargate, a bridge solution powered by Layer Zero. Simon Baxis, VP of Business Development at Layer Zero, commented, quote, "There is no clearer signal of where finance is headed than a state government bringing the dollar on-chain." Following the testing phase, the public launch of WIST is scheduled for July of this year. The Stable Token Commission is currently working on integrating reserve management features and regulatory compliance protocols. Wyoming residents and registered businesses will be able to participate in the testing program through the Commission's official website. All right, that's the end of the article, and does it raise the hackles on your neck? Probably should. let me back up just a little bit. Half of me is dead set against this. The other half of me is saying, why are you dead set against this, dude? This is freaking fantastic. Let me read this one sentence. There is no clearer signal of where finance is headed than a state government, and we're talking about a state of the United States, Wyoming. You could say Texas, California, Florida, whatever. We're talking about a state protected by the 10th Amendment, because this shit ain't written in the Constitution, can issue their own stablecoin. Right? So they're bringing the dollar on chain. They're bringing the federal-backed United States dollar backed by the full faith and credit of the United States government. But a state is bringing that dollar on chain. And as far as I can tell, there's nothing constitutionally that can stop it. And it becomes a 10th Amendment issue. So half of me really doesn't like this shit because I'm like, it's yet another stable coin. And what have I said about stable coins? You're going to see a bunch of them, a whole plethora of stable coins. And all of them are going to be designed to ship the United States debt creation off to the poorest sections of the globe. And that's not going to help people. It's just not. It's going to make things worse, honestly. However, I'm a huge states' rights fanatic. I love me some 10th Amendment. If it ain't written in the body of the Constitution of the United States, you can do whatever the hell you want. And they literally mean that. You can do whatever you want. Because the Constitution was written where there's some pretty good safeguards as to what a state can or actually what a state specifically cannot do. And that's all the federal government should enforce, right? If it's not written in the body of the Constitution of the United States, then the state makes the determination for that state whether or not something is going to be done or not. This is a 10th Amendment issue. And again, I am a huge fanatic of the 10th Amendment. Big fan, big fan of its work, man. And somehow or another, these two tensions are fighting within me at almost purely 50-50 levels. I love this idea and I hate this idea. I really wish I could get off the fence on this one, but I'm going to have to wait and see where it goes first. And finally, for today, 400 South Korean officials have disclosed $9.8 million in crypto holdings. Ezra Reguera, Cointelegraph, South Korea's Ethics Commission, has revealed that high-ranking public officials, not just pleb public officials, no, high-ranking public officials in the country hold an average of $24,000 in crypto assets apiece. On March the 27th, the country's Ethics Commission for Government Officials reportedly disclosed that more than 20% of the surveyed public officials hold 14.4 billion won, or $9.8 million in crypto. This means 411 of the 2,047 officials subjected to the country's disclosure requirements hold cryptocurrency assets. The highest amount disclosed was $1.2 million belonging to Seoul City Councilor Kim Hee-young. The officials held different crypto assets, including Bitcoin and, of course, a smattering of shitcoins, which I will not name. The disclosure of public officials' crypto assets follows calls for transparency from its prime minister. In 2023, South Korean Prime Minister Han Deok-soo said in a news conference that high-ranking government officials must include crypto in their property disclosures. The official said crypto should be treated similarly to other assets like precious metals. On May the 25th, 2023, South Korea passed a bill mandating public officials to include crypto in those asset disclosures. In the new system, granted South Koreans access to the crypto holdings of at least 5,800 public officials starting in 2024. In June of 2024, crypto exchanges in the country launched information provision systems to simplify the registration of information about crypto holdings. The new law was created in response to the controversy involving South Korean lawmaker Kim Nam-guk, who was accused of liquidating crypto assets and concealing holdings of around $4.5 million US before lawmakers in the country enforced the Financial Action Task Force travel rule. Kim departed from the Democratic Party at the height of the controversial lawsuit to relieve party members of the burden of that lawsuit. While prosecutors requested a 6-month prison sentence for Kim, the lawmaker was eventually acquitted after a judge ruled that crypto assets were not subject to public disclosures at the time Kim made the transactions. So there you go. South Korean public officials are not idiots. They're holding Bitcoin. All right, ladies and gentlemen, that is episode 1063. It's in the bag, along with the cat, who I have not let out. I do hope you enjoyed today's episode. Please support the show. 5-star reviews on Apple Podcast is huge. It drives all manner of discovery for this show. If you have the time today, spend it on me a little bit. I spend my time on you guys a lot. So if you can, and if you feel that you've gotten value today, please, I'd appreciate a 5-star review on Apple Podcast, or you can stream me Satoshis on any Podcasting 2.0 enabled app and give me some boostergrams. I mean, announce your weddings, announce your child's birth. I will read it. Just give me some boostergrams and I will see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.